Hey guys, Joel here again. Let's take a look at another market update for the Myrtle Beach and surrounding area. I know 2 weeks ago and 30 days ago we posted about inventory continuing to rise, and that's what we continue to see in the market. How's it going to impact the market? Well, inventory will continue to rise here. Many experts are saying for the next few months. Interest rates, as we likely know, will continue to increase, but will the home prices change? Let's go ahead and take a look at what we got going on in the market today. And starting off with, obviously the number of homes available is likely to grow. We couldn't get much less. I know here locally, depending if it was a single family home or if it was a townhome or an oceanfront condo, inventory was really at an all-time low. So there was only, unfortunately, one way to go for the sellers, for the buyers, maybe give them a little bit more breathing room, and that was more inventory on the market. So that's likely going to happen, continue to happen for the next few months. And mortgage rates will likely continue to go up. We spoke with a lender in another episode about mortgage rates, where they're expected to go to, and what the different options are for the buyers in today's market. Now, one thing that even though the inventory will increase and the mortgage rates will likely increase, the prices are projected to continue to climb. Now, keep in mind, this is nationally, right? Every area of the market is a little bit different. I spoke with one agent in Vegas, that had, still had 40 offers on a property, but it's a little bit of different market there, and it was a lower price point with, a bigger buyer pool for that price point. Another agent I spoke with in Raleigh, their inventory went from 1 week to 3 weeks. So every area is a little bit different. And, in the Myrtle Beach and surrounding area, it's a little different for the homes, single family homes, but we've gone from about 1.5 months inventory to a little bit over 2 months inventory. So even though inventory is increasing, interest rates are increasing, the prices, are predicted to still stay strong. Of course, the prices have been soaring here for the past 2 years. There's still going to be low inventory on the market. Remember the difference between a buyer's market and a seller's market. There's 6 months of inventory on the market. We're still at 2. So we've got a long way to go. But let's take a look at the numbers here. And you notice on the slide below, inventory is growing in all segments of the market. In the residential, we've gone down to 68.4% pending. 2 weeks, 4% down in the past 2 weeks. 2 weeks ago, we were 3% down. So in the past 30 days, we've gone 7% less pending home sales, and that means 7% increase in inventory. Active listings are up 185. 2 weeks ago, they are up about 160. So that's more than 300 new homes, and this is both new construction and resale within the past 30 days. New construction pendings have gone down again. In the past 30 days, it's gone down about 5%. It's gone up in the listings in the past 30 days, about 120, 64 in the past 2 weeks and 75 2 weeks prior. So we're now up to 500 active listings for new constructions to be built on the market, under construction as well. A little bit more breathing room for the buyers. The buyers are they're going to be seeing more options on the market. Resales, the pending is 58%. That's down 5%, 7.5% over the last 30 days. Active listings, we're up to 870. That's up 120 in the last 2 weeks. So this inventory is rising. The interest rates are rising. Will it impact the prices? We will see it impact the prices, but right now it has not substantially yet. Of course, every property, every community is going to vary. Oceanfront condos, we are below the 50% pending. It has been a long time that I've said, less than 50% pending, but we're down to 47%. And again, I say down, keep in mind that's still very strong on average. It went down 3% in the last 2 weeks, and last 2 weeks ago, we saw a bigger increase with over 10%. So it's still strong, oceanfront, but that's the segment of the market where we've seen the most change in the pending listings and inventory. Active listings, 413, that's still relatively low, but 132, it's gone up just in the past 2 weeks. Taking a look at the non-oceanfront, townhomes, pending 70%, still very strong. It's gone down 9% in the last 30 days. Active listings have gone up 52 in the last 2 weeks and about 120 in the last 30 days. So we're looking at all segments of the market, inventory growing, pending transactions going down. This is not any sort of doom and gloom type of episode or anything like that, but it does show the market is not correcting itself. You might say correcting. It's not crashing. I would use the term for it that it's stabilizing. We're beginning to go into more of a normal market, but we're still at a strong market, and we see a strong market for months to come. The land stats have stayed even. 2 weeks ago, we were at 27%. The active listings have actually gone down. I had 15% there, but it's 15 minus 15 active listings. 2 weeks ago was plus 32. So of all the segments of it, go figure, land stats are the strongest when it comes to pending sales. All right, guys, that is the market update for this week. Again, we are seeing an increase of inventory nationwide and locally, and as you can see in all segments of the market, those interest rates are rising, but the home prices and the strong sellers market, the strong market is steady. We're just seeing some stabilization, perhaps down the road to a more normal markets. All right, guys, again, this is Joel with the Advantage Group. If you have any questions regarding your property's value, if you need to sell in order to buy, if you have any questions whatsoever, whether it be refinancing, things that you might need to do to your home, even if you just need a broad update market analysis, don't hesitate to reach out. Until next time.